I'd like to welcome you today on behalf of MicroLoan Foundation and Swiss Capacity Building Facility. Welcome to our webinar on Women, Technology, and Resilience in Zambia's Financial Ecosystem. We will explore how the Katumba Savings Platform is empowering rural women in Zambia. And I'm pleased to introduce our speakers today. We have Jack Ngoma, the CEO of MicroLoan Foundation Zambia. We have Lydia Troop, the founder and director of Quirk Consulting. And we have George Sagers, MicroLoan Foundation Zambia's project lead for the Katumba Savings Platform. Just to let you know, today we are recording the session and we'll be sharing it with you by email afterwards. And please, throughout the session, if you have any questions, please put them in the chat or in the Q&A box, whatever you find first. So just a bit of context, the Swiss Capacity Building Facility is a public-private platform that provides resources, financial resources, and technical assistance to financial service providers like MicroLoan Foundation in order to drive financial inclusion and improve the quality of life of low-income households, micro-entrepreneurs, smallholder farmers, and women specifically. MicroLoan Foundation, you'll hear a bit more today, obviously, from the team directly, but just to give you some context, is a social microfinance institution providing business, loans, and training to women facing poverty in sub-Saharan Africa, with operations in Zambia, Malawi, and Zimbabwe. So since 2023, SCBF and MicroLoan Foundation have been working together to develop the Katumba Savings Platform and develop digital savings solutions specifically for women living in rural Zambia. And today you'll hear a little bit more about the challenges that the women face specifically, but more broadly, in sub-Saharan Africa, financial inclusion has been growing and has been becoming, more available. There are more financial services available to previously excluded populations. But and a lot of it is thanks to technology and digital financial services, specifically mobile money, and those kind of infrastructure. But women in general still face a lot of challenges in accessing financial services. First of all, being limited financial resources and opportunities. There's lots of barriers due to gender norms, depending on the countries they're living in. And there are also gender disparities in terms of access to mobile phones, mobile phone ownership, or even digital connectivity. And some of it is due to affordability. There's digital literacy issues, and many different challenges. And I think one of the many ways that this challenge can be, turned into an opportunity is by designing products specifically for women. And I think that's where we'll hear today from MicroLoan Foundation about how they've done that and how they continue to do that. So we'll be sharing a pre-recorded session followed by a live Q&A. So again, please feel free to share your questions throughout the session. You can pop them into the chat, and then the panelists will be able to address your questions after the panel session. Thanks. And I'd like to invite Jack, the CEO of MicroLoan Foundation Zambia. Would you please provide us with a bit of an overview of what you're doing in Zambia and the kind of reason for starting up the Katumba Savings Platform and what your goals are with that?
Thank you for the introduction, Azelia, and also I'm very excited to be part of a discussion this afternoon to provide more information about the work that MicroLoan Foundation is doing, and specifically to drill down a little bit more into the Katumba project, which is an exciting project that we are currently implementing here in Zambia. I will begin by first giving a general background of MicroLoan Foundation. So as rightly mentioned, we are a social microfinance organization. We are focused on empowering uh, women entrepreneurs. We are doing this by providing small loans. We are doing financial literacy training programs, and also we are facilitating savings. Now, our model is what we call a high touch model. This basically means that we have our field officers who go into the community once in a month to hold meetings with clients. These meetings are primarily for training, they are primarily for facilitation of savings. There is also repayment of loans. There is also recapitalization of new loans, among other things that are done. But in addition to the high touch model, we also implement technology alongside our high touch model uh, to allow us to reach areas that we would normally not reach. Um, so this is, for example, in our current scenario, our disbursement are 100% on mobile money. And what that means basically is that we are now able to allow women access financial services within the communities in which they are located, which otherwise they would have not accessed because they likely are very rural and very remote, and in those environments, there's likely no banking facilities. So what mobile money does, and in this case, the disbursements that we are doing through mobile money is that there is and we are reaching into those areas that are very hard and very difficult to reach. Um, Now, we are aware of our clients and the background and the limitations that might they come with. So we are very deliberate in the way that our technology is designed. We are using very simple and very basic, but yet very powerful tools that can allow women to access services. And we're doing this through USSD shortcodes. So basically what it means is that these technologies can be accessed using very basic requirements. It also means that they can be accessed in almost any place because obviously they're not depending on internet. They're just depending on the ordinary phone networks that is generally available in many parts of the country. Using the USSD shortcode currently, our customers are able to, for example, check the balance on their loans. They can see what their next loan progression will look like. They can ask a mini statement. And so this is information that in a normal microfinance or in other financial institutions, they may have to walk into a physical bank to get to know how they are doing on their loan. But we are using technology basically to make and customers access that. On this USSD channel, we are basically also intending to add a lot of other features that are, going beyond the traditional scope of microfinance. For example, we are working on a project which I think is very exciting. This is related to medical insurance, where customers can access insurance on the platform that covers them for medical expenses. We are also thinking in in the short to medium term, to add options for basic financial training modules that they can access again using their phones. But what is very exciting is the recent addition on our shortcut, which is the Katumba project, which is the project why we're here to discuss in detail. But I will come back and discuss probably more as we go through the discussion. But I thought I'd just give that introduction. Thank you very much.
Thank you, Jack. And maybe can you give us an idea of what the Katumba platform, savings platform looks like today, how people are interacting with it? It's kind of just recently launched, but maybe a bit more about what's happening today in terms of who's accessing it and yeah.
You know, that's very correct. So again, what is Katumba? I think clearly maybe that's a question to begin with. So Katumba is basically a digital saving wallet, and basically it runs on any feature phone. It runs on USSD, On this wallet, customers can make a deposit, make a withdrawal, check their balances. Now, we developed this product after observing some of the challenges that we've seen on traditional village bank. I must mention that microloans program has always promoted savings. And obviously, our initial savings promotion was based on the traditional village banking mechanisms. And in this village banking mechanism, basically, you have a group of women coming into one community, carrying on their cash. They make their savings. They get the savings, they put in a cash box. They lock the savings until they meet in the next meeting, which can be in a month's time or whatever frequency that is agreed. And some of the problems that we noted in that traditional model is, first of all, the issue of security. That although you would allocate different group members with different keys to allow for control, but there was always cases where this cash somehow was not managed properly, and that could discourage the community from going ahead with future savings. The second problem we noted was that no matter how much effort they put into record transaction, there was always an issue of poor record management. And this comes from the fact that obviously we are dealing with people with very low literacy levels in many cases. And also sometimes these records can be manipulated deliberately for other individuals' personal benefits. And the last component, which was another major issue, was obviously the problem of conveniency. So if you are saving money and you're saving with your village group, if you have an emergency, you will have to make a, you'll have to make a trip into your community to go and negotiate. And if all your key holders are not available, again, that money may not be available for you at the time when you actually need. So this is really the essence of having Katumba. This is the kind of problems that Katumba is trying to address. So number one, with digital wallet, we are addressing the problem of security. You don't have to trust people to keep money in a box. This is money that is kept safely in a secure digital wallet. The second problem is the issue of records management. These transactions that clients are making are automatically generated electronically, building up a valuable source of information for a player like ours to understand what the savings pattern is and therefore the capacity of these individuals. I think the third element is the issue of conveniency. So rather than a member having to wait for other members to come and address an agent problem, they have control on that wallet and they can make withdrawals up to an allowed amount whenever they need to address an issue, a child is sick, a school fee amount is due, or other things that can come along. So these are some of the issues that I could say have motivated us to go ahead and develop this project in Katumba. Now, I potentially would want to cover some challenges. Obviously, these are issues, there's always challenges that are related to a project such as this one, as exciting as it is. The first challenge we have had to deal with in the project is a challenge around literacy. In rural areas, in very remote communities, it takes a lot of effort to build confidence for the user to begin to trust the channel. And that is a journey that we have had to take as MicroLoan. As I mentioned at the beginning, we have a very high touch model. We are regularly meeting our clients once in a month. We have field officers that are spending at least a day in every community interacting with clients. So this is a challenge that we are addressing and we continue addressing through the project. There's obviously the issue of the limited functionality. As excellent and as good as our current channels are, we would probably want to provide more functionality on the service that we give. But on USSD platform, we have to tailor make the services so that they can fit on those feature phones. And so therefore limiting some additional features that we might want to add. There's a challenge of cybersecurity. Yeah, this is common. This is widely known everywhere, particularly now. Cybersecurity is very prominent in our market. But one thing that is important for us to emphasize is just like any other issue, these issues can be addressed with a lot of client training, which we are doing. And I'm also happy to mention, particularly in the case of Zambia, that the government itself is very interested in addressing this challenge. And hence they have put in quite a number of mechanisms to help customers report fraud quickly, and where possible to make follow-ups on those fraud. There is an element of cost. This is also true. Now, these are generally costs related to other services. So microloan foundations themselves are not charging for the service. But yes, there is a cost should a customer want to maybe go and deal with other people using that savings they have made, they will be charged. But we continue engaging with mobile money service providers on these matters. And I believe that we will see better costs in the future as more and more people are adopting the Katumba, or rather generally mobile money platform as a means of payment and paying for services. So yes, I can give those as some of the challenges.
Great, thank you very much. And maybe just quickly, one last very short question before we move on to Lydia. Can you please just maybe tell us what are what's the typical profile of a microloan customer, or what kind of economic activities are these women engaged in?
Well, thank you. We typically are dealing with women in rural areas and remote locations. So they would be involved mostly in basic trading activities, market stalls. They would be selling along the roadsides and yeah, businesses of that type. We have seen quite a good number of saving. I think we see some of our customers saving as low as 20 kwacha, and I think I don't know how much, that's slightly below $5, maybe 5 cents. I can't really know the exchange rate, but we are dealing with these individuals that are dealing with very small amounts of money, and we're giving them an opportunity to have a safe place where this money can be kept in a transparent manner, but at the same time giving them that very important digital footprint that they can use as an asset should they want to talk to a financial institution like ourselves, a bank, or any other stakeholders out there that might want to know the financial behavior of these clients.
Okay, great, perfect. So I think that provides a nice transition into Lydia and the work that you've been doing with MicroLoan Foundation, and really listening to the clients, what their challenges are, what their needs are, their kind of current saving habits, and how they might be able to become formalized. So please tell us about some of the work you've been doing.
Wonderful. Let me just share my screen. And hopefully everyone can see this okay. All right, I'm seeing a nod from Azalea, which is great. And so thank you so much. I am looking forward to telling you all about some of the research that we conducted as MicroLoan Foundation was seeking to really redesign the savings platform. It was really important for them that, as Azalea mentioned, they could really understand the needs of their clients. And so we conducted some baseline research using a behavioral science approach to specifically understand how the context that these female entrepreneurs are operating in is influencing how they make decisions and how they actually engage in savings behaviors. So we identified through our research with clients, loan officers, and other stakeholders a number of features of the context that influence people to behave in a certain way. And in behavioral science, we call these patterns of thinking and behavior either heuristics or biases. And these are really kind of common patterns that people display when faced with a particular context. And so there are a number of different behavioral factors that we identified. We won't have time to go through all of them today, but there are just a few that I wanted to call out, which were really essential to the design of the new savings platform. So the first one I want to speak about is present bias. Present bias is something that I'm sure everyone listening to this webinar has experienced, which is that we tend to place more value, we place more weight on what happens right now, the current benefits and the current cost of something compared to the future benefits and future costs. This is true of everyone, but it is especially true of people who are operating under conditions of scarcity, people who are busy, people who are poor. and people who are overwhelmed. As Jack mentioned, these are women who are not only running their businesses, they're often running their households as well, and they're balancing a lot. And so it makes sense that they would focus on the immediate benefits and their immediate needs. Women that we spoke to didn't perceive an immediate value in saving money. Women want to multiply their money. They want to have their money, quote unquote, work for them. We heard that over and over. But because the previous version of Katumba did not offer any interest, there was no immediate visible value in saving money. Other forms of investment that women could practice, like purchasing additional inventory for their business or even starting a building project, was much more visible to them. It was a benefit that they could immediately see and offered them that immediate reward. Conversely, the benefit that was being offered, which is really an important benefit, which is this benefit of being able to graduate to a larger loan, is something that is much more abstract, right? So this is something that, while it's important to be able to get a bigger loan for your business, it's not something that you can immediately see and touch, like inventory for your business would be. And so it was perceived as being too distant, too much in the future, and too abstract. And so this wasn't encouraging women to save more money because they weren't seeing that immediate value in it. The second thing I want to touch on is a really key driver of all of our behaviors. And Jack has already touched on this, which is this idea of friction, this fact that it was a little bit hard for people to withdraw their savings. We know that even small hassles can deter people from behaving in ways that align with their own interests. And because savings were difficult to withdraw from the original mechanism of savings that clients had, they weren't encouraged to save. There was just that little bit of extra friction that prevented them from saving money. And the final factor that I want to talk about is this idea of scarcity, which I briefly mentioned at the beginning, and which both Jack and Azalea have touched on, which is that women in Zambia are often operating in conditions of extreme scarcity, both in terms of time and in terms of money. Women's income is often not consistent. Their income can fluctuate depending on the season, depending on the market. And so the savings program really needs to be designed for those conditions of scarcity. And what I mean by that is that when we have only a little bit of money, we're much less likely to put some aside to save. When we have a lot more money or relatively more money, we're more likely to engage in savings. And so we found that the savings platform really needed to be able to prompt women to save during times when they're most able to do so, during moments where they're relatively flush. I appreciate I am going quickly, but we will, as Azalea mentioned, share all of this with you as well. So I just want to touch very briefly to wrap up on some of the ways that these insights translated into the product design. And so you can see a value matrix here that we created, as well as whether or not these features were actually incorporated into the final product. As Jack touched on, the limited technological skills and capabilities, as well as just simple limited time, means that the product needed to be easy to use and have this USSD functionality. The scarcity that women face, the multiple competing priorities that they face between their businesses and their homes, meant that women have limited attention, they're less likely to remember to save money. And so we've incorporated an SMS feature to remind women at specific times, particularly times when people are more likely to have more money, to deposit savings within the platform. A really important piece of this platform was to decouple the savings from the loan repayment. And so to enable women to feel like they might be able to save even a little bit of money, even if it wasn't the exact amount of money that would be required for their loan repayment. And finally, just touching on a couple more important features to counter that present bias. One of the really important things that was built into the new version of the product was an interest earning account, which would allow women to actually have an immediate benefit in saving money that felt tangible to them, and that they could encourage them to save money. So just to conclude, the value proposition of the new savings platform that we encouraged coming out of this research was to build a product that really leans into 4 key tenets, which is convenience, reliability, security, and flexibility. These are the things that busy, overwhelmed female entrepreneurs need in order to manage their money effectively. And I believe with that, I'm at time. So I will wrap up and pass it back to Azalea.
Perfect. Thanks, Lydia. So I think maybe now turning it back over to George. So we've heard that, women are having some challenges in terms of trust, maybe transparency, security of their money. They need maybe some support, some nudges to remember to save, or to, especially maybe when there are times of lots of money where they have lots of income, that they, put some extra money aside. So please tell us about how you've designed the digital platform and the tools to kind of, respond to some of these needs and the challenges that they're facing, and how that's been implemented in the platform.
Yeah, absolutely. No, thanks very much. Just share my screen. Okay, great. So what I wanted to focus on is kind of how we brought this solution to life. So we've talked a lot about the necessity for it and the background to the organization, as well as Lydia's research and kind of how that informed the actual design process and subsequent development and current implementation of the project. So what we ultimately managed to do was build an integrated USSD saving solution that provides clients with an average interest of 15% per year. Now, this was a pretty big achievement, and I wanted to kind of talk about how we went about doing this. And I think the best way to categorize this is into these three buckets. So building for the user, how do we build for the user? How do we build within the ecosystem? And how do we build within the environment? So first of all, in terms of the user, so we focused on making a very simple, kind of easily accessible application. Bearing in mind, a lot of our clients use feature phones, so like the ones you can see on the screen, and they often have very low technical literacy rates and often low network coverage in rural areas. So as a majority of our users use this system, and they're already using an existing USSD code. So that's where you would dial like *123# and be given the kind of menu that you can see on the screen at the moment. They're already using that kind of system, or that exact system, to manage their loans. So it made sense for us to integrate any saving solution with that existing front end, that existing application. So that was the approach we took to add it as a piece of functionality within an ecosystem they're used to. So when building for the user, although USSD is kind of technically quite a simple solution to build, it can be quite a complicated solution to design. And the simplicity of USSD is ultimately what makes the design actually quite complicated. If you think of the applications maybe you're used to in terms of retail investment or online banking, there's a lot going on, and there's a lot of buttons and colors and accents and a lot of features that enable you to identify different features. And often those features will be designed in a way kind of using behavioral science to help steer you onto a certain route. It makes it very salient to see your balance, for example, at the same time as maybe seeing account history all on the same page. Whereas USSD, we don't have that benefit. It is a very basic approach that requires a constant back and forth interaction, and it's very, very limited in terms of what you can display on the screen. Obviously, you can only display text, and of that text, it's a very small amount. So one of the things we did here is actually go out and buy these feature phones and make sure that as we were testing, we knew how it would respond and kind of the character limits we had on phones, and how do you access like the next menu, etc. So we had to pay a lot of attention to how the system was designed, even though it is a kind of basic system from an interface perspective. And within that framework, we built it very, very simply to enable individuals to check their balance, to make savings, and to withdraw money from their accounts. So primarily around the user, that was our focus. Now, building within the ecosystem. So the fintech space in Zambia is very, very green. It's a very, very new space. And providing microfinance in the way that MicroLoan Foundation does it comes under a different regulatory requirement than investments and savings. And one of the main requirements that came out of our research is this idea of multiplying money. Saving solutions traditionally have either been very basic in terms of maybe somebody has a SIM card and someone else has the PIN code, and people kind of arrange to push money into that account. In which case, it's basically it's just another mobile money wallet. But within that, there's transaction fees of pushing money in, there's transaction fees of pulling money out, and there's also just no interest held, or no interest created on money held in mobile money wallets. So most solutions, or nearly all solutions that exist, are some variation of an extra wallet, which is kind of branded as savings, but ultimately doesn't deliver the value that clients want of savings, and often costs them to save because it costs them the transactions. So what we wanted to do here is really focus on our ability to provide interest to clients, even a small amounts for small amounts of savings. We wanted to be able to make that multiplying your money salient and make it possible. So in order to do this, we needed to find suitable partners to help provide the kind of investment fund infrastructure, particularly from a regulatory perspective, to facilitate essentially the holding of funds and the investment of funds and creating that interest. So this worked well. We were able to find a partner, and we integrated with that partner. Essentially, the infrastructure for savings was all built on our side, and we were able to plug into a fund, a partner fund, to create those investments and create those returns. And this is a fund which is regulated by Securities and Exchange Commission, etc. It's all kind of it covers all of the relevant regulatory requirements. But in doing this, certainly something that we identified at the very beginning of the project is we need to always make sure we de-risk the project and make sure it's sustainable. And the way we design the solution is to be integrated not just into a single fund, but into multiple funds. So as this project develops, we're looking to continue to build relationships with other kind of fund providers and other financial institutions in Zambia who I think are starting to see the value of engaging with clients in rural areas. There is savings there, and these are clients that a lot of institutions want to reach, but traditionally don't have the technical or operational footprint to do so. So our savings platform has been able to kind of bridge that gap in an effective way. The final area I wanted to touch on was kind of building technical systems in a kind of challenging environment, and I mean both technical environment and almost a physical environment. So we'll probably touch on this later, but Zambia experienced a major drought last year, and this has led to severe power shortages this year. I think we're on about 3 hours of power a day, so very, very low. And this plays havoc with your ability to keep charging your laptop. When the power goes out, network goes down, and then that means that signal drops, etc. So I think just the very physical environment we're working in, which was exacerbated by the drought because Zambia relies on hydropower, has created a challenging environment to work in a digital space. And on top of that, technology is also not built in isolation. So systems are often dependent on other systems, other code that other people have built, or other services other people host. And it's necessary sometimes to integrate with a mobile network operator. So when working with a mobile network operator, they're also experiencing the same technical challenges. So often you have to make sure you're building systems with a lot of resilience and redundancy in case other systems go down within that environment. So that's certainly something that we had to consider as part of the design process. But ultimately, I mean, MicroLoan Foundation has always seen, they've always been seek to provide the savings and the tools and the skills to lift women out of poverty. And up until this point, the primary focus has always been the provision of loans, and this has enabled us to also provide savings as another tool to really kind of build out a much more, a much more complete toolkit for the clients we're serving to achieve that kind of high level objective. So this was a bit of a rundown of how we went around the design process and how we addressed these kind of three components of the ecosystem: the user and the environment.
Great, thanks for that explanation. And I think, mentioning the fact that the clients have been used to using this type of platform or USSD interface for loans is, quite important, because they have that kind of behavioral, mindset, I guess, in terms of using this type of platform. Do you have maybe a broad overview or a general idea of how many of the clients are using the platform for loans and or savings?
Yeah, absolutely. So we were cautious to being a very green space and a new approach, particularly integrating with a fund. We've been very cautious in our approach of rolling out. It's obviously a very sensitive area, and we want to make sure that everything has been effectively stress tested, both from a technical perspective and also just from a structural perspective, given that we're engaging with funds. So if we look at a snapshot of where we are at the moment, we've seen an average of 200 kwacha per client invested in savings. This is across approximately 1,500 clients, which is how we've got to a fund value at the moment, or a total amount saved of 300,000 clients, which is a very large amount. And 1,500 clients is very much a cautious rollout for us. We've ensured that we focused on kind of geographical areas one at a time. So I think it was really because of this high engagement straight off the bat that we realized, actually, if we multiply this up to, we've got 60,000 clients. So obviously, if at 1,500 clients we're at 300,000 kwacha, we need to make sure that everything is very, 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 very resilient as we scale up to kind of a very large amount. So yeah, that's kind of where we are sitting at the moment.
Okay, great. And also, just because I saw there's a question from the audience, from Matt Mins. He's asking about the transaction fees that clients might pay, because you mentioned already that for mobile money, for example, you would pay a transaction fee to deposit money in and withdraw money out. So maybe just to clarify, are there any fees for the customers when they're depositing or withdrawing money from their savings?
Yeah, absolutely. Sorry, go ahead, John.
Oh, yeah. Okay, fine. I just wanted to build on my first comment. So it's MicroLoan Foundation commitment to make the saving platform and therefore we've made a decision not to charge anything on the service that we are providing our customers. But because we're working in a bigger network of other partners and other related services, there's always a possibility that when the fund has moved from our ecosystem, for example, the customer has withdrawn from their savings wallet and now they have it available on their own wallet, they will be charged if they want to go and make other payments. And those charges, depending on the user, can be seen as high. So, and that's a complaint that we are very much aware of. But one of the ways we want to address that particular problem is obviously we are encouraging a very strong digital system for our customers that where possible, particularly now with this flexibility of making payments on mobile money, they try to use electronic funds. But where not possible, they withdraw a minimum amount so they don't have to incur huge charges But I must mention that this is currently something completely out of our control. If money moves from our ecosystem into their own mobile wallets, there will be fees attached to that. Yeah, thank you.
I think just to build on Matt's comment there, because what Jack's rightly referred to the cost of transaction, which always exists when clients are repaying loans and when loans are being distributed. And if they're making payments for anything else within the mobile money ecosystem. With the current saving structure, part of our initial contract or part of our current contract with the fund is that there are no transaction costs specifically when pushing money into the savings account and withdrawing money from the savings account. So that's covered by the mechanism or the partnership that we have with the fund, which provides not only interest to the client, but also covers the withdrawal costs as part of the investment mechanism they've got. And I should say that this is very much an evolving relationship. It is kind of in its very early stages, and a critical component of what we're doing has been data focused, right? So we have a number of kind of ongoing data scripts, ongoing analysis that enables us to really get a picture of when individuals' behavior, when money's moving in, when money's moving out. And ultimately, this is what we want to do, what we want to use to try and kind of increase interest payments and try and increase the kind of capacity for other funds as well to be able to make decisions around investment of kind of collected funds.
Thanks. And maybe also to come back to you, Lydia, and some of the nudges that you were talking about and reminders that women might need in order to, encourage them to save at critical moments in the year. Can you maybe, I know it's a bit early days, but can you maybe talk to us a little bit about some of the things that you're experimenting with or the types of messaging you're looking at? And then maybe even the times of year, at what critical stages you're looking at sending those messages?
Yeah, absolutely. It's a good question. So as George mentioned, we've been a little bit cautious with the rollout just to make sure that there's no risk to clients. But the plan is to A/B test a series of behaviorally informed SMS messages, which have already been developed. And we're essentially testing against a control message, which is just a very straightforward prompt to remind people to deposit into savings. Versus behaviorally informed messages. And those behaviorally informed messages are using both principles from behavioral science as well as evidence from the microfinance space around what works to encourage savings. And some of the kind of concepts that we're using, as you alluded to, is timing. So thinking about when people are going to be most likely to deposit savings. So thinking about market days, thinking about end of the month, thinking about harvest. So when are the times when we can really prompt women to save? We are also using concepts like social proof, which, really, I think leans into this kind of existing mental model that people in Zambia have about saving, which is that, previously there were group savings and there was this kind of social component of savings. And so we want to use social proof messages to let people know how much other people are saving and give people a new benchmark for what is kind of normal to save. I think in the past, clients anchored on a specific amount and felt like if they didn't have 20% of their loan amount, or they didn't have 100 kwacha, or they didn't have this specific amount in mind, then it wasn't worth them saving. And so giving people a new anchor and letting people know that saving as little as 2 kwacha, as little as 5 kwacha is going to help contribute towards their goals. So there's a number of different behavioral principles I can talk about, but we'll stop with those 3.
Well, we'll look forward to the outcomes of those tests in the future. And Jack, maybe to come back to you and what George mentioned in terms of the climate conditions in Zambia that women have been dealing with, the droughts. I think it's having impacts on pretty much every system in Zambia probably. How do you then encourage women to save when it's a bit of a kind of a on one aspect, savings is meant to just, help them in these types of, times when resources are limited, and to become more resilient. But on the other hand, resources are scarce. So then how do you, continue to save during these times when you actually need those resources? So how do you go about doing that as an institution? And in the long term, how do you think that will play an impact on this type of platform?
Thank you so much. It's a very interesting question, and I must say, a very difficult one at the same time, because it covers a lot of complex areas that we have to deal with, especially when we look at behaviors of customers and limitation in terms of information based on the current systems that we have. I mentioned in my earlier introduction that we, as MicroLoan, have always promoted savings in very traditional setups of village banks. And in these setups, we rely on what is written, and sometimes not everything is written, and sometimes what is written is not what is available. And because of those record challenges, it is always difficult then to come up with behavior in terms of how does this particular challenge impact generally the behavior of our customers in such a difficult time as the one that we have right now with the drought. We are not able to provide adequate and accurate information to give to say this is how our clients' behavior has changed as a result of this drought that we have seen, which has been very devastating for many of our customers. So one of the benefits we see, and this is something that is really encouraging us to do what we can do with the platform, is that by encouraging women to use a digital platform, we are building variable data sets that we can use to analyze and assess the impact, and then use that information to be able to provide adequate guidance or advice to our clients on how they can withstand some of the challenges of climate change. So we are seeing a future that we will be much more effective as an organization in terms of the interventions that we are making to customers based on the data that we are collecting over time. Over the time, and I think Lydia has explained this seasonality of savings, we will then use those patterns to say, okay, this is the right time, so that if there is a challenge like we have now, they would have built up enough. And when they have little, they would be able to still make the use of the little that they have to still build in some resilience. So again, a very complex, challenging question, but we see much more information coming out as a result of this process to enable us as an organization to provide much more meaningful service to our customers on service.
Yeah, thanks for that. I think data, and then you mentioned earlier also providing additional services like medical insurance, for example. And I think having that full package really helps support women and the general population to be more resilient, and just have kind of a whole toolkit of options of how they can deal with some of these challenges. George, I would be interested to come back to you and hear a little bit more about, kind of what are the biggest technical challenges. You mentioned a few already, but also how can you support women if they have some challenges? Do you have some kind of call center, or are you mentioned there's there's a high touch model, so I'm guessing there's also people in the field who are able to support women if they have issues. Maybe there's peers supporting each other. How do you kind of get around the digital literacy issues, and how do you support them to kind of maximize the value out of the platform?
Yeah, absolutely. So I think starting off, it does require the on-the-ground operational presence. And I think I've worked in a number of different sectors, and it is that face-to-face which really kind of builds trust and also builds confidence. A lot of it is confidence. People worry that they press something and it's all going to break. So leveraging the fact that we do have individuals on the ground, and when we're first introducing a system, it's something that is introduced by someone they know, they trust, and someone who can walk through the system with them, even if it's as simple in quote marks as you can deposit, you can withdraw, you can view your balance. Having somebody walk through that and then do kind of go through an example. So everybody invest, if they've got it available, everyone invests 2 kwacha, and then you can actually see, oh, 2 kwacha's gone in, 2 kwacha's in my accounts, and everyone withdraw 1 kwacha, 1 kwacha comes out. So you've kind of all gone through that process together. So I think I really wouldn't understate the importance of having that on the ground kind of technical engagement, or on the ground in-person engagement in getting these solutions off the ground. I think posters and print media is also something that we had as part of this project. So providing kind of leaflets and kind of showing kind of the individual steps is really, really important. And then in terms of providing support, it's actually something we're rolling out at the moment, based on kind of customer feedback. We wanted to make sure support, given that the savings solution is part of a wider MicroLoan Foundation ecosystem, it's not a standalone system. We wanted support to cover more than just savings. So the system that we've designed in the initial phase is just to trigger a callback, basically. So somebody can say, I'd like some assistance. That then logs a ticket, which can then be handled by somebody from MLF.
Mm.
You mentioned a bit more about tech. Was that's more about user challenges more than the kind of a software challenges, so to speak, or the kind of build challenges? Like, I could touch on that as well, but I want to make sure I answer the right question.
Yeah, no, it's great. I think we do have one question from the audience that I wanted to share with you, Jack. So Laura from the audience is asking about the village banks that you've mentioned. Is your product being offered to members of these groups, and are they using your product instead of participating in the groups? So I guess kind of how is the platform being used with the group dynamics?
Thank you. So yeah, we still have very strong group mechanism. I think in the model that I earlier explained, I mentioned how microloan structures are. We have groups of 5. So these groups of 5 have a common meeting area in a community, which we call a center. And our loan officers will attend to that community once every month. Most often times, they will spend pretty much most of the day in that community, including assessment, visiting clients, and all the things that are related to the process of loans and other activities for microloan. But what we have done with the savings platform is that when it comes to making saving, we have given the clients more independence on their transactions. So they have much more control. They can make a saving or into their own individual accounts. But what we also want to build is this, I think Lydia has already mentioned something where there's a prompt that can go to the other group members, just so that there's still some group cohesion that is going on and understanding of what each member in a group has been doing. But by and large, I have more control as an individual on how my savings are managed, and I decide on what rate I choose to grow the saving, which I think is a major shift, major change, which we hope will promote the culture of savings among our clients. I hope that is fair enough in terms of answering the question.
Yeah. No, and I do find that very innovative in terms of using that idea of the social proof and, the idea that others are saving a certain amount, and that can kind of help to motivate you and inspire you to, continue saving or maybe even stretch your goals, become a little bit more ambitious. I'll be keen to hear how that works. And so I think we're coming to the end of our webinar already. And I think we've had lots of, very interesting insights that we could apply to kind of, replicating this type of platform in other countries or broadening it to different types of populations. But Jack, maybe I'll give you the final word in terms of, so we know we have these challenges in terms of motivating people to save. They have limited resources, but it varies, from different times of years. They're not necessarily salaried workers, right? And so how can we support them to save when they have the resources to do that? And then also, what's your approach as an institution to scale and grow this platform And I guess what would you recommend to anybody launching this kind of platform in another country?
I hope I'll cover
Big
all
question,
those
sorry.
different parts in a minute or less. So let me just begin by saying, first of all, our immediate goal as MicroLoan right now is to get as many of our clients moving into this savings platform. I think that will be excellent, and I hope that it will bring in a lot of value and appreciation of the importance of savings in our communities. Our short term to medium term is to also see how we can build this platform to be open and accessible to other members of the community, which is something we're also working on very strongly through the technical team, and hopefully at the right time will be made available. In the longer term, I think George has already mentioned part of this, is we also want to allow in as many partners to be working with MicroLoan so that we can increase the range of saving options that we are giving to customers. And that customers can have choice in terms of what type of saving they feel is good for them, and what long-term goals and ambitions they may have. So they will pick based on a variety. This really is that in terms of adding value to them. In terms of scalability, I think we are optimistic as MicroLoan. I think we believe that with a tool like this, we can go beyond the four corners of our offices. We can reach areas that ideally we've not really even thought of. I mean, as long as there is a network, a basic mobile network, we should be able to work in such a village. We should be able to work in such a community and provide a similar service as anywhere else. Now, I think in terms of how easy it is to replicate. One of the things I must say, and I think I see this quite a lot in Africa, is that there's a lot of possibility on mobile phone. Okay. And it's good also to know that big players like the government are also recognizing this as a fact. And a lot of services, even in Zambia now, obviously things like social cash transfers and other things are going through mobile money. So there's a lot of opportunity for any other microfinance or other players there that are seeking to make interventions at large with an impact, that there's opportunities that are there using the mobile technology as a means to reach those that have been excluded financially. I think that would be my attempt to answer some of those questions you have asked.
Great. So we've covered quite a bit of ground, had some interesting discussions, and we've had more questions coming in from the audience. So if Jack and George and Lydia, if you want to go ahead and turn your videos back on. I have a few questions about asking a little bit about the clarity on the customer journey and how that works, specifically looking at account registration or account opening so that people can get started savings on the Katumba platform. And then maybe George, a question for you about the USSD sessions and whether or not they're kind of long enough, I guess, for interactions that need to happen for people to conduct the transactions of, checking their balance statement and withdrawals and deposits and things like that. So yeah, I don't know if George or Jack, if you want to start off maybe with the customer journey and how a client goes about opening an account and starting to save.
I can go first.
Great.
Thank you for the question. So we're currently implementing the phase 1 of the digital saving platform, and this phase is primarily focusing or targeting on MLF clients. So every time when a client is registering for a loan, their savings account is automatically created. MicroLoan's registration is more semi-self registration process. A customer will go on our short code, they will dial register for a loan, and it creates and sends them a prompt that their savings account has equally been activated. So it is seamless for the customer. They don't have to feel like it's an additional step that they have to take or additional work for our field officers. It is integrated. But I think for us, what is very key is the steps that follow once a customer has been registered. And that's the the savings of the transactions that I begin to make over time. So I think I can maybe take the opportunity to respond to something around how do we market the savings. So in every center meeting, we are using those opportunities to promote the savings and the benefits that are linked to the savings. And over time, I think last time we did indicate on the numbers. I don't have the current one, but George might speak to the current numbers. So using those interactions we have with the customers, we are able to create awareness on the need and the benefit of making regular savings on the platform. So that's how the current system is. And I think in terms of onboarding the clients, it's seamless. It doesn't have to be a separate step. Just as you're onboarded on your loan products, you're automatically being onboarded on your savings platform as well. Thank you.
Great, thanks. And so, George, if you want to maybe speak a little bit to also the USSD sessions, there's a question from the audience asking about, are the sessions long enough for the interactions that the user needs to make in order to do all of the transactions that they might want to?
Yeah, I think totally sure by long enough, but in terms of, is it like the length of time you can spend on a session?
I guess, like, does it, I don't know. In my prior experience with USSD sessions, sometimes they kind of just drop off or the connection might not be strong enough. So I'm guessing that
got it.
Around that.
Got it. Yeah, no, it's true. I mean, the sessions are fairly limited in length. I think after about 20 seconds of not using the system, it can time out and then needs to be re-accessed. But it's a very basic system. So when the user lands on USSD, they have kind of two major options. They can see their loan information and transact on kind of loan repayments, etc., or they can go down the savings route. And within the savings route at the moment, it's checking balance, it's making withdrawals and making deposits. A lot of kind of extra communication is handled by SMS. So one of the limitations obviously is screen size, and getting somebody to kind of scroll through multiple texts never really works. So by design, we kept the content very, very limited on there, and everything is fairly kind of broken up into the relevant pages. So if the user is wanting to check their balance and make a deposit, that can all happen within a single session, because both of those happen very, very quickly. It's only a couple of seconds that you would spend on each screen before triggering the next action.
Okay, perfect. And maybe also, I think there was a bit of a question about kind of liquidity and how are the users actually handling kind of deposits and withdrawals. Are they going to some kind of mobile money agent to actually deposit their cash and then it's digitally, recorded, or how does that actually work?
Yeah, so within the session that is created on USSD on a specific mobile will always have the phone number as kind of the unique session ID, and that phone number is what is used to essentially identify the account that you're working with. So you couldn't, at the moment, you wouldn't be able to push deposits onto someone else's savings account or withdraw funds from someone else's savings account if you weren't on a USSD session with that specific number, because that number is essentially the key. If you wanted to kind of push cash on there, it would go through a mobile money agent onto your wallet, and then subsequently onto the savings account. I mean, we have explored other options. MLF does still deal with cash in some of its operation. There has been a big push for mobile money, but generally the kind of mobile money direct link to a specific account is kind of how clients are used to dealing with kind of digital saving.
Okay, perfect. And Jack, we had a question for you also in terms of, in your presentation, you talked about the benefit of having of customers being able to develop a digital footprint by through digital savings. Can you talk a little bit more about kind of the impact of that or the benefit of that and how that's or the potential of that, I guess. And, I think you mentioned that it can help them potentially access loans, for example, as well. So if you could speak a little bit more to that and how you also communicate that benefit to customers. Lydia, in her presentation, did talk about the fact that it's maybe not, one of the major values that customers, derive from this type of platform, but it's still kind of a benefit, I guess. So.
Well, thanks. I mean, yes, I can talk about the benefits. One of the things we have known as MicroLoan is that our clients are willing to make savings. And in fact, clients have always made savings in one way or the other. The only problem is they've saved in ways that sometimes does not give them real value to an outsider to assess their financial capacity. And as for any financial institution, such financial records are really very crucial and very critical to provide a meaningful service to the customers. So what we are doing with this savings platform is we're basically encouraging the same savings behavior that we have seen traditionally either in the village bank groups or in other things, and we're saying, put it in a format, in a way that it can create value for you. So these little savings that could have been going under your mattress or your pillow or whatever the place says that the money was, bring it out in a digital format. And that means that begins to create value for you, because if you keep doing it for a period of time, we can all see your financial discipline based on your commitment to make regular savings. It doesn't have to be big amounts, like we mentioned. It doesn't have to be huge. It's the commitment you have as a client to make these weekly or monthly or whatever frequency that one has set for themselves. So the first benefit is exactly that. It's the fact that we can now read into your financial savings behavior and design appropriate financial services that can benefit you and help you in a situation in time of need when you need that financial service. So it's creating the financial insights and helping us to understand the customer's behavior more than if they keep these in other non-traceable areas. Second, I think we spoke about the issues around security. When you keep money in a box, and I gave examples, sometimes we have 3 key holders. We hear stories all the time of how this money eventually was, lost or stolen. With digital savings platform, that's not going to be a problem. That shouldn't worry you. It's not even, it's your money itself. So we are promoting there's a benefit for the user to know I can access this money, I can keep it in a safe way, and I know that it will be there. I think the last point, I did cover this as well. I said, we want the customer, this money should be accessed in a convenient manner. If I have saved money and I have a need and I have to access it back, it should be easy for me to find it. That's what digital money does. Anywhere, wherever I am, as long as I have my phone with me, I have a need, I have to pay for my child's school fees, I have to pay for a medical fee, I have to pay for other emergencies that may come, I can do it easily. And I can, probably resolve my issues quicker than having to go and see my village chairperson or having to go and see my village secretary, which would take a lot of time. So there are levels of benefits, but the digital footprint for us as MicroLoan is one of the key things. And as a financial institution, we want to ensure that the products that we create are designed to meet the customer's financial cash flow patterns. So that's what I can really respond to that.
Okay, thank you. I think it is so important that this idea of building a safety net, and really kind of building that financial resilience and using that as a stepping stone to maybe develop other income streams or access other opportunities in the long run is something that can be kind of life-changing. Maybe coming back over to you, Lydia, do you, I think there were a lot of really key, you know, points that came out of the research that you did in terms of, I really like this concept of, you know, the multiplier effect. I think who doesn't want that for their money, right? Were there any other kind of surprising things that came out of the research, either in terms of, I don't know, challenges or things that people wanted, and what might motivate them to save?
Yeah, absolutely. I think that one thing that's maybe not surprising, but interesting is the complex mental accounting that women in the communities that MicroLoan Foundation is working with have to do on a daily basis. And so women are often navigating business income as well as personal income. They're trying to account for the amount that they need to repay from their loans. And I think one thing that was interesting is that women don't necessarily have separate pots of money to deal with all of these different financial transactions that they need to make. If there is a personal emergency, they may withdraw money from the money they had saved for their business. If they need to buy more inventory, they may withdraw from their personal account. So one thing that's not been implemented yet, but which we are hoping to implement in a version 2 of the platform, is the ability to actually label accounts and to label savings accounts. This is something that has also been tested in other contexts in low and middle income countries and has shown some success, but the ability to actually have these different pots of money to enable more effective savings, where women aren't having to make a big transaction out of their business account if they have a personal emergency, for example. I think the other thing that is interesting from a behavioral perspective really is this idea of savings goals. As I mentioned in my presentation, I can't remember if we actually got to this part of the recording, but one thing that has previously been challenging is this anchoring that women do to the loan collateral. And so women have really been working towards saving or depositing a specific amount of money, which is the amount that they need to have in their account to repay their loan. And there weren't any other kind of concrete benchmarks for women to think about how much they should be saving, and in particular, how much they should be saving at particular times when they may be a little bit more flush with cash, or how little they could save in circumstances where they don't have a ton of cash, but they could put away even 2 kwacha or 5 kwacha. And so another thing that we are thinking about in the product is, can we actually let women know how much other people in their community are saving? So really tapping into that social proof that I talked about, and also let them know, you know, how much progress they've made towards a specific savings goal that they might have. So I think those are some of the kind of behavioral concepts that have either been integrated into the savings product or will be integrated into the product in a future version.
Well, I think I could talk about this all evening. I think it's some really great work you're doing, and I'm looking forward to, like I said last time around, I'm looking forward to hearing how things develop. We're running very short on time, so I think we pretty much handled most of the questions from the audience, but I'd like to hand it over to Steve Mark, who is the chairman of the board of directors of MicroLoan Foundation, and go ahead with your closing remarks.
Great. Well, thanks to all of our panelists. As Azalea said, this is a topic we could talk about all day, but we don't have all day. So we really appreciate everybody who's joined from all parts of the world today to listen in to this incredible design of products that as you heard, were specifically designed with women's needs in mind. So Lydia talked about how much we've listened to our clients in the design and how we evolved this platform from the first iteration to the second iteration with interest and making it easier and more accessible. And one of the things that we heard a lot from Jack is that it's both technology and touch. So the technology needs to work, and thank you, George, for all the work that you're doing there. But without the touch, without the training, you can't build the knowledge of how to use the tools and how to save more effectively, but also to build the trust in the fact that the platform is accessible to the women that we're serving, and that their savings can help them create a digital footprint, have a backstop for emergencies, and to multiply the savings that they have. So when they need the savings, they can access them anytime they need and use them for whatever purpose. I love the idea of having specific named sort of buckets that people can put money in for different needs. So in addition, and like the savings, the support that we appreciate from all of you really has a multiplier effect. When we are able to utilize funding to develop products and platforms, and our training and network of loan officers and training officers that are out in the communities, that makes such a difference in the daily lives of the women that we're serving. And we greatly appreciate all the support. For more information, we'll certainly be following up with a recording. You can visit our website, MicroLoanFoundationUSA.org, and reach out to us anytime. And I just want to say thanks again to everybody who presented and to all of you who joined as attendees. Have a great afternoon.
Thanks, everyone. Take care.
Thank you,
Thanks.
everyone.
Thanks,
Have a great
everyone.
day.
Thank you.
Thank you.